In today's video, I'm going to talk about today's CPI numbers and their impact on the September interest rate cuts or no cuts, and also potential impact on mortgage rates. Welcome everyone to Personal Finance Night, where we talk about everything related to investing, building wealth, and protecting assets. The channel is geared towards real estate, so today we're going to try to discuss the economic environment for interest rates, mortgage rates that have an impact on real estate. Okay, so today, August 14th, CPI headline was 2.9%, which is the lowest we had in over 3 years. So the first time CPI came in at lower than 3% since March 2021. Okay, this is great. CPI is definitely heading towards the right direction, and it's slowly moving lower. Okay, this gives the Fed clear trend that it's moving lower and enough confidence, like they always like to say, that it's moving lower. Okay, when they have this confidence, they will cut. So September rate cuts are baked in. It's a done deal. We're gonna have a cut. Now the question is it gonna be 25 basis points or 50 basis points? Are they gonna cut a quarter point or half a point? Okay, I think it's gonna depend on the job numbers that we're gonna receive for the month of August. If they're very weak, then they might go for half a point. But regardless, whether it's a quarter point or half a point, I think there is no impact in September on mortgage rates. Yes, mortgage rates are currently moving down. Okay, the whole lending environment feels that it's weakening, that it's lowering, that it's decreasing, and this includes mortgage rates. Okay. However, when the Fed cuts, it does not, by 25 basis points, let's say, it does not mean that mortgage rates are gonna go from 6.47 as of today to or 6.5 for easy math to 6.25. That's not how it works. The Fed September cuts are already baked in. So keep in mind that lenders and mortgage lenders are very sophisticated. Just like bond investors are more sophisticated than stock investors, lenders and companies and people investing in mortgages and mortgage loans and loans in general are sophisticated, and they already saw this coming. So they baked in, they included their this rate cut, potential rate cut in the future already in their numbers for a few weeks already. Okay, and that's why we saw the average mortgage rate go down from high sixes, even sevens, to 6.47, 6.49 currently. Okay, so there won't be any impact whether they cut 50 or 25 basis points. Now, if they come out and cut, let's say, 75 basis points, or there's an emergency meeting and they cut more, and they cut before even their regular meeting, that's a red flag, and everybody will freak out and mortgage rates will go down dramatically. This is not going to happen. The economy is still strong. The fundamentals are still strong. And yes, there will be a recession, and even if there's a recession, it's going to be shallow. Unemployment is still in the low fours. Back in the days, unemployment at 6% is normal. That's full employment. Now full employment is at 4, I guess. So don't wait on the sidelines and without buying your primary home or without investing in real estate. I think if you're, as an investor, if the property you want to buy cash flows because you have a great deal, you negotiated, you did your work, you contacted many people and found a motivated seller, then you buy it. And if later down the road interest rates go down, mortgage rates go down, then you refinance, and that would be a cherry on top of the icing. but don't sit on the sidelines. You gotta do it. If anything, you're paying down your your debt and increasing your equity. Okay. Now, if you're a homeowner or looking to buy your primary residence, still you should keep going. And if you find the one, you should get it and refinance down the road also. So um, whenever it cash flows, just keep going with it. Don't bet on interest rates going down or going higher or whatever. Yes, you can tell in general the trend, but nobody can predict interest rates and mortgage rates. So if it cash flows, get it. If you have a good mortgage rate, just lock it. If you're in contract already, just lock your rate. Okay, this is how I would do things right now. Okay, so if you like this type of content, please make sure you subscribe, like, share this video with your spouse, your partner, whoever you're gonna buy a property with, so they are on the same page as you and don't hold you back from investing, doing the work, going to open houses, and all that fun stuff. All right, thank you for watching.